Welcome back to Treasury Talks. So today we have Dan Hillery from MSTR True North. So you guys know him. He's been analyzing the trade on strategy, breaking down a lot of the prefs, ton of really good content, and also started Stravera Capital this year, which I think is awesome. Kudos to anyone starting their own business. And obviously Brian Rothenberg, classic host. Really appreciate his insight as always. Dan, welcome to the show.
Hey guys, what's up?
Yeah. So it's a bloody day. We thought Jensen was going to save us yesterday with Nvidia earnings. Now Bitcoin 86, 87 in that range. People have been calling for 85. Today, we want to go through, obviously, let's just digest a little bit of the market. How do we feel about it, Brian? Also, how do you feel about it? I thought we were going to at least have a little bit of a pump before things softened until we actually got a rate cut and could justify a rate cut if there was going to be a little bit of pullback in AI stocks. But it looks like the market sniffed that out early and is going ahead and pulling back deeply on us. How are you guys feeling?
Yeah, I mean, I think definitely a bloody pullback. I didn't see it coming at all. I was nervous about strategy pulling back to NAV, which it has. In terms of the other treasuries, yeah, it was bound to happen at some point. It happened quicker than most expected. In terms of the overall market, I mean, Nvidia earnings were positive. One of the best earnings calls in a long time. I mean, AI CapEx spend demand is insatiable. That is driving all of the equities performance has been AI CapEx spend. No reason PMIs won't go higher in 2026. Rate cuts are coming on the horizon. I don't think there's a chance Powell doesn't cut because they didn't release economic data in December, which is a real problem. Obviously, we're seeing problems with the liquidity facilities and the repo spiking above SOFR. So, I think all these things are really, really poor out or short term, really bear. They have been quite detrimental to the price of Bitcoin and then kind of just general beta, whereas Nvidia is propping up the whole market. But I don't see a red 2026. I'm not planning on it. Still don't. So yeah, we can get into that. I think it's pretty critical we have a good 2026 for Bitcoin. But the M2 money supply hasn't grown like it did during 2021. So I think expecting a blow off top Q4 2025, looking back, was irresponsible. And now we're just looking forward.
Yeah, I heard somebody talking earlier that the quantitative tightening's ending basically December 1st, and that's where sort of easing is going to start coming in. But just pulling on one of the threads that you mentioned there, Dan, you talked about it. We were kind of chatting a little bit before we jumped on the stream here about why 2026 is so important for Bitcoin in terms of being positive, especially if we're going to end the year in this area where we are even flat. So do you want to dive deeper into sort of why you think that's so important?
Yeah, absolutely. So I'm a huge Bitcoin believer, have been for a while now. I really believe in the trend line of adoption, the power law, which is the growing of a monetary network as a square of users and as the square root of hash rate. So hash rate, user growth, and price growth all have followed these similar power laws, which are decaying exponentials. And so I think that's mission critical for Bitcoin to grow continuously. And so we never got a blow off top really above the price above the trend line. We got about 20% above in the beginning of 2025. Now we're sitting about 20% below. So I personally think it would be very, very bad if we retraced to 50K and then stayed there for a year. 2026 was red and equities were positive. I would be very skeptical of the future outlook because this thing needs to be adopted, right? That's the whole point of Bitcoin. It needs to be adopted. It needs to absorb monetary debasement. And it needs to be a monetary network for both humans and AI agents in the future. Therefore, it needs to continue to be secured by hash rate, and more users need to adopt it as a debasement hedge digital capital. Okay, so I think all those things will happen. But if you believe those things to happen, then I don't think you can expect a bear market in 2026, and it'd be extremely problematic because we'd lose the power law trend or it'd start trending down. So I believe that 2026 would be positive, especially because monetary conditions have no indication that we're going to get some sort of 2022 scenario. In 2022, I just read a little bit about it again. Powell was screaming from the rooftops, we're keeping interest rates at zero. Okay, people are buying long end of the U.S. debt. And then everyone starts getting completely destroyed. Bank balance sheets completely destroyed as they go through the fastest rate hiking cycle in really, 2 decades worth of history. So what happens there? People are selling out of assets at a rate unprecedented rate. People are going back into duration. They're going short. The inflation is high, so they're coming out of duration, and they have to protect themselves in this rate hiking cycle. Now, 2022, we saw the bottom. We saw liquidity injections via not QE, and Bitcoin continued on its adoption curve. Once we flushed out all the disasters of FTX, collapse. Okay, where are we now? I think the liquidations in October are still cascading forward, and we're feeling the effects and the drawdown as a leverage beta with QQQ. I think a really interesting chart. And so everyone charts Bitcoin relative to the S&P, Bitcoin relative to the NASDAQ, but they all use index-weighted S&P and NASDAQ, which essentially means the larger equities, which are getting larger and larger and larger, Apple, Microsoft, Google, Tesla, Nvidia, are weighted much heavier than the rest. Equal weight S&P is down pretty bad for the year, much like Bitcoin in 2025. So is Bitcoin underperforming the S&P? Well, Bitcoin's underperforming the Mag 7, and the Mag 7 is being driven by the CapEx spend. Okay, yeah. I think that this isn't a bubble in terms of traditional assets. Maybe it's a bubble in terms of multiples on AI companies, but I don't think it's a bubble across the economy. You get the K-shaped economy. Look at the PMIs, which are the Purchasing Managers Index. The PMIs are essentially business sentiment in the U.S., and they've been in recessionary territory or recessionary conditions for the past 2 years. We haven't exited this sub 50. It's a diffusion index. So anything below 50 indicates contractionary outlook, and anything above 50 is expansionary. So every Bitcoin bubble has coincided with an expansion in PMIs. And until liquidity gets pumped into the system for Main Street in the form of lower interest rates, we're not going to get expanding PMIs, services, or manufacturing. And therefore, I don't think Bitcoin can expand to the crazy levels that people are expecting. Therefore, I think adoption trend needs to continue, and as it is. But we need to recover here in the next 3 or 4 months, in my opinion.
From that, do you think, when you say adoption, is it Cash App? Is that the biggest news you've seen in the last 3 to 6 months of distribution, actual usage? It takes the accounting burden off of individual merchants. Is that something that is a big mover for you when you think about, okay, I see adoption potential now?
Yeah, adoption, the way I think about it, I think Bitcoin would be a digital settlement layer for the entire world, for AI agents, for all sorts of individuals, corporations, whatever corporations look like in the future. So if it's a digital settlement and verifiable ledger of transactions secured by energy, then people will need to hold large amounts of capital in Bitcoin. It has to be backed by Bitcoin. It doesn't mean Bitcoin needs to be the settlement layer, the transaction layer. And I think at some point maybe it will. But I like stable coins as a transaction layer. I like Stretch. I think it's going to have a real impact in terms of a stable equity backed by Bitcoin. But with Bitcoin as digital energy and settlement layer, the more I really think investment portfolios allocating to Bitcoin over time is very important. And so I think about people I know that are old, successful, wealthy, whatever. Over the past year, they've especially been interested in allocating a percentage of their portfolio into Bitcoin. And their outlook is much different than kind of younger people's. And it's that they just buy it and hold it for 10 years and they're pissed the price is down, but it doesn't mean they're going to sell out of it. And the ETF flows reflect this exact same positioning. Smart money, big money knows that holding pays off. And so I don't think there's a lot of panic or fear with regards to that. Also, traditional asset allocators don't have the same expectation of returns that Bitcoiners have. Having the expectation of 100 CAGR can really, really mess up your mental well-being when CAGRs underperform. And that's exactly what we're seeing with Bitcoin. I think that'll happen for the foreseeable future.
I think that's a really good point, especially where we're looking at the sentiment now. And both of you guys know that I'm relatively new to Bitcoin, so I haven't even been through a full cycle or anything like that. But people are saying that it's the worst that they've seen on some of the social media and everything else out there. And I think that exactly the point that you made, which was we were waiting at 110 to 125 for Bitcoin to go to 150 to 200, and it just didn't for a long, long time. So sentiment was already primed, and then when we go down, it really goes, a lot worse for people, just kind of in that framing and everything. But zooming out, and we all have talked about this, zooming out and giving it more time, like those older investors that you were talking about, Bitcoin's going to do what it's going to do, over time. And there's no there's no change, I guess, into the overall thesis that we've seen. But kind of looking at the volatility and where we're at today, one of the questions we wanted to ask you about, Dan, since you are running a fund, is how are you positioning yourself defensively? Are you getting a little bit more conservative with some of your, investment decisions and everything? Like, just how are you thinking about sort of the market, and then also like over time, how you're going to outperform, especially with that sort of Bitcoin as the benchmark for you?
Yeah, I mean, I got Q4 totally wrong. I thought we were going to run into interest rates. So I've pretty much kept pace with Bitcoin while being levered long. So I closed out positions at good times, and then made some money in the pref IPOs, specifically SATA. But right now, I'm just looking out kind of 2 years. I've never been kind of a short Bitcoin guy, so I think good ways to hedge exposure are, long VIX calls or long sort of volatility. I don't really like IBIT puts because they're quite expensive. So maybe you take some off the top during peak euphoria, but I'm still super bullish for 26 to 27. And, I have very few investors, but I think they're quite bullish on the asset class over the next 2 years as well. So as long as we have been able to preserve capital and looking out 2 years, I'm quite bullish, and so I'll position accordingly. But if Bitcoin doesn't work out, my fund doesn't work out, and that's just the way I'm set up. So that's a lot different than a traditional hedge fund, but it's how I do it.
Well, to be fair, our business doesn't work either as a Bitcoin media / personal finance website. So.
And I'll be working until I'm 70 if Bitcoin doesn't work out. So I think we're all in the same boat there, Dan.
Yeah, and that's not necessarily a responsible way to do it necessarily, but
right.
But like, if you believe in the asset class enough, Bitcoin's an asset class, not a stock. You can't do this with an equity, right? If I were to say to you, my fund doesn't work out if Palantir doesn't work out, that would be an irresponsible investment decision, very irresponsible. But having a fund that is backed by Bitcoin, kind of we hold the treasury in Bitcoin, then it's like a real estate fund, right? It's like a equities fund, theoretically, a U.S. equities fund or something like that, or a Brazilian emerging markets fund, whatever it is. Like, you have an asset class that you trade around. I don't ever put a more than 5 or 10% allocation in a specific name, because corporations have extreme risk. We've seen that with MSTR. We've seen that with treasury companies, right? There is massive risk there. You have to be underpinned by the asset class itself. If you believe in that long term, then that's kind of your benchmark hurdle rate, whatever you want to call it. And so that's how I position.
Yeah. On the side of the CAGR of Bitcoin, this is something that was circulated, I think, Joe Burnett, either at Unchained or formerly from Unchained, and then Christina, who's been on the show before, a friend of ours, was looking at, hey, this is realistically from 92K what a 30% CAGR looks like. So a lot of people are a little bit deflated by that expected 1 million Bitcoin by next year or by December. What would be your take on just this chart of like a realistic view of what the asset could grow?
Yeah, I expect power law growth moving forward, which is slightly over 30 CAGR for the next 10 years, and then slightly below. I also think, so this is all realistic. I expect $1 million Bitcoin by like 2034, 2033, 500,000 in 2030-ish. That's always been my thesis since 2022. That's the growth rate I thought would occur. I thought we'd see a bubble this year. Got that completely wrong. But as long as that trend continues to solidify, I still remain bullish on it. And you can lever this. You can do all kinds of things with this growth rate. So I'm still bullish on this growth rate, is all I have to say. And assets don't grow. $2 trillion assets don't grow at 50% annually, except your Nvidia.
Cool. I had a bigger picture question, which is you've been in the MSTR trade a long time, Dan, and now I think you're one of the leading lights in sort of analyzing the preferreds, both from Strategy and from Strive, possibly in the future from Metaplanet. But I'm curious sort of what has changed for you in the last year when we were talking about strategy where we had the ATM and we have the converts, but we didn't have any preferred shares. And then all of a sudden at the beginning of spring, we started having these preferred shares come out in the 5 different classes that we have today. So, in terms of your investment thesis overall for strategy and then sort of some of the unlock that we're getting there, I'm wondering if you could kind of walk through what sort of changed in your mind with those events over the last, 6 to 9 months.
Yeah, it was the equity. So I was too bullish during the top in end of 24. And then I exited this summer when we were at around $400 a share. And the reason that's all personal. That was as I was trying to set up the fund. The reason I did that was because I thought the prefs were detrimental to common in the short term, which they ended up being. High cost of capital, IPO'd at cheap prices, which reduced the Bitcoin per share for the common. And I saw them as a systemic risk to the common. Then with the change in guidance and all that kind of stuff, like it was a different thesis. And when I was buying, cash flows covered the outstanding liabilities, free cash flow did. And so that was converts, and the converts were predatory for a number of different reasons. But the market cap was much smaller, and the amount of Bitcoin per share that could increase over a short period of time was also very high. Now the company's a much larger company. The amount of Bitcoin per share they can increase, it's just a lower expected value. So you have to get in a book. And so I have like the charts of like, okay, if they maintain a 20% leverage ratio using the prefs and use common equity to cover the liabilities, it's going to outperform Bitcoin. If Bitcoin does a 6x, they'll do roughly a 10x, right? So that's outperformance. But you're only going to get that performance if you get in at book value. So I don't see it trading above 2 MNAV in the future, much like a bank or financial institution. But I do see it outperforming Bitcoin. This pain is like bound to happen. And as the cost of capital of the prefs goes down, I think it will be looked on as a very good investment once again. And still, I think the prefs are a great investment. I think STRF is too cheap. I think STRK is too cheap. I still think it's one of the most creditworthy companies in the entire world. So I think its debt is very much underpriced. And so I think there's some trades to be made there. I really do. But there was a time when I think things just got a little bit too excited. Like they're not, yeah.
I think that's a good observation. I think there's also different people within the space that are changing narratives a little bit. So, back in the spring, it was, we want to be able to issue stock and, convert that into Bitcoin. And that's going to, have some flywheel effects. And then convertible bonds come after that. And then, you get into preferreds. And I've heard different people say, no, today you really need an operating business as well, right? You need something that's going to generate cash flow to do some of these things. I'm not saying that in the context of strategy, because strategy, just given their size today and I guess their past success, everybody puts on sort of a separate shelf, if you will, right? But there are other people out there who, you look at the guys at Strive and they say, we've got this product, we've got digital credit that we're selling in our one preferred, and you know exactly what's going to happen, and we've got the dividends set aside for that for a year, and we're going to be, trying to juice things in other ways there, but that you're set with that. And then there are that other group of people I started with here talking about needing an operating business there. And I'm curious what your thoughts are around sort of that operating business thesis, or do you like these companies that are doing more digital credit instruments of various types? I think that's been very helpful for you in terms of your fund and trading, but overall, is that sort of the best play, I guess, within the ecosystem?
I mean, I was pretty vocal about this when everyone was coming out. Like, I didn't buy Metaplan at the top. Like, I never held it at the top. And like when people are coming out and posting these models that expected exponential increases in market cap to fund a diminishing return in Bitcoin per share yield, which is exactly what's happening. If you're increasing the market cap exponentially and the marginal dollar needed to harvest Bitcoin per share is increasing exponentially, but the Bitcoin per share you increase is decaying exponentially, which is how the math works out, you're essentially racing to one MNAV. But the MNAVs crashed before people, the MNAVs crashed quicker than people thought. But it's that exponential, like to go from, 1.5 Bitcoin, however much Bitcoin per share to, 30% more Bitcoin per share, and you're at a $2 billion market cap or $3 billion or $4 billion or $5 billion or $6 billion like Metaplanet, then, the marginal new buyer, you need like another $1 billion worth of buy pressure in the equity to come in. And that's just unsustainable. So yeah, I think Bitcoin balance sheets will be strong and robust and something of the future. I don't think issuing equity to buy Bitcoin, that premium just like won't exist like for much longer, in my opinion, especially with the saturation in the market. Digital credit instruments, I think they're going to be great, products. What is it really? It's just leverage. It's non-recourse leverage to buy Bitcoin, which is great. I mean, it's great. Only a corporation can do that. And owning the debt or the preferred shares are great too. But that's not to say it's like some sort of crazy, like we're going to go see a 7 MNAV because they issued fucking stretch.
Mm-hmm.
So that, and then
what is, I guess, how do you approach it from like a fund perspective of like, are you looking just for purely like what's undervalued, or if, MNAVs, is that like a high, very rich moment? Are you like, wait, like this income generating component and this dividend is like, wait, we need to like pull back and like allocate to that. Like, how often are you making those choices between like prefs versus the common?
Yeah, I mean, I've been mostly like IBIT for the past, whatever it's been, few months, just because I haven't seen anything that was like been super relatively high value. And I was kind of nervous of this quarter. And so it seemed to have played out. But in terms of, what am I looking at? Metaplan at a discount? Sure. Right. You take on risk. You can't put all your chips in that basket. Metaplan at a discount, I think, is a good buy. Okay. What else is a good buy? I think the press, like literally like stride at 15% annualized yield, probably a buy. There's a lot of PTSD from the financial crisis when these preferred stocks. So the real precedent for these preferred stocks were the financial institutions, Lehman Brothers, Bear Stearns, General Motors, not a financial institution, but they had a lot of notable preferred stocks during the financial crisis. They had both cumulative and non-cumulative. And for people that don't know, the difference between a cumulative and non-cumulative is if strategy. So for example, the only non-cumulative preferred is STRD, STRD, issued by Strategy, lowest in the capital structure. If they miss a dividend payment, then they don't owe it to the shareholder. They just miss it. And the shareholder isn't obligated to get it. It's like a dividend for a common stock, right? Like if Microsoft misses their dividend on the common equity, the shareholder isn't owed it, okay? But then, so during the financial crisis, you had a bunch of these cumulative and non-cumulative. Cumulative is if a dividend payment's missed, then it's compounded and is owed to the shareholder by the issuing corporation. So it's essentially investor protection on those sorts of equities. During the financial crisis, for example, I think it was Lehman Brothers had about 280 billion in outstanding, 260 billion in outstanding liabilities and 280 billion worth of assets. So that's a $20 billion delta there, right? When those assets were repriced down just 4%, the equity was completely erased, any shareholder equity. So if you didn't have a senior claim on the assets as a debt holder, if you're a junior to that, so think converts in MSTR's case, if you're a junior to that and a preferred stockholder, you had no claim over any, there were no assets over which to have a claim. So your value was completely wiped out during that financial crisis. So people are thinking back and being like, these dividends don't have to get paid. They may go to zero. There's no actual claim on the Bitcoin. The thing about MSTR is the capital structure is very transparent. So those dividends will get funded so long as there are assets by which to fund them. So I've always said, as long as there's $1 of value in the common equity, the cumulative dividends will get paid in Strategy's cap structure. They won't suspend dividends. Like maybe they will on Stride in the case they might be going bankrupt or something. But I think these are very safe products, and I think the market has PTSD from financial institutions that are backing them.
Yeah, and I don't know. To me, I know that we all kind of look at these companies and say we're not going to be selling the Bitcoin and all those things, but for Strategy to go bankrupt to the point where they're thinking about suspending dividends or not paying them on Stride, like I think you probably would have seriously considered, if you're the leadership team there, selling some of the Bitcoin to fund some of these things if you still believed in the asset over the long term, right? And you look back too at what happened to Strategy stock during the dot-com bubble and how far they rode that down and still stayed solvent and still stayed a going concern. That's a really big drop from here, even within Bitcoin and the ecosystem that way. So I don't think that that's really likely there. I caught the True North stream that you did last week with Grain, and you were talking a little bit about Stream, which is the new preferred that's going into Europe. And I think at one point you said that you thought it was deeply mispriced. That's what stood out to me. And I'm curious if you want to sort of dig in a little bit more on that one specifically, but also what you see across the board with these preferred classes, right? Like I didn't get in, for example, on some of the early IPOs from Strategy this year just because I couldn't at Fidelity, and then I applied, hit some button, and now I get all of them and I could get into them, right? And so one of the things that is probably new to a lot of people is how to think about them. It might be new to you, but it seems like you grok that a lot quicker. So I'm just curious, as you look, you said you got into SATA early. You were talking about Stream last week. So how do you look at these preferred classes when they do IPO and sort of the value extraction that you can take out of them?
Yeah, I mean, they're all new asset classes, and with a B- corporate rating on Strategy, you can kind of gauge where the credit spread should be. So that's about 550 basis points over the SOFR rate, or the comparable rate. If you think about the I forget the exact name, but it's the Macaulay duration. So the Macaulay duration, based on yield pricing, is essentially like what's the equivalent duration of a preferred stock, or of a perpetual duration liability. And so for the preferred stocks, it's about 10 years. So your benchmark for STRF would be about the US 10-year rate. It's yielding around 4.1% right now. And so STRF is trading at like a 600 basis point credit spread above that. That's a little bit cheap relative to other B- credit ratings. But, maybe there's some relative value there. In terms of other valuation metrics, I mean, the swap rate in the UK or in Europe is roughly 100 basis points less than in the US. So debt over there priced in euros, the credit spread will be higher at issuance. So the at issuance Stream has an annualized coupon of about 12%. And so that's all to say that maybe it's cheap relative to the other US products, but markets take a long time to price these things in. But that's the way I'm looking at it.
What do you see as, you have these consensus views that, people are looking at 140K calls and, buying IBIT at whatever strike that is. And then it's immediately switched this week to like 85p, like a put at 85,000. But it's consensus, so it's not going to happen. Like it's guaranteed not to be exactly what people expect. What is your thoughts on okay, I see this probably bottoming in the next week or two at 86 and bouncing? And is there anything in your head where you're immediately, gut reaction, if we break 92, we're going to 85, might get a small rally, and then who knows from there?
Yeah, I think this is all BS. Like, people are on here looking at TA lines and saying they know what's going to happen. I don't know what's going to happen. I have no idea. I have zero clue. I wish I knew, because I would be infinitely rich. If you could pin every bottom, you could sell every top, you would make so much money it wouldn't even be funny. So what's the long-term thesis here? I mean, I think Bitcoin is going to follow a power law trend. I think it's going to be somewhere around 150K by early 2027. I think it's going to be somewhere over 200K in early 2028. And then I think it's going to be about 450K in 2030. I'm structuring my hedge fund to make the most money for my investors if those targets are hit, without being liquidated, essentially. And yeah, that's my play. Right now, is this relative value? If you think you're going to hit 150K at the end of 26, early 27, that's like 80% from here. You put on some IBIT debit spreads, you're looking at an 8x on those. You can't do it with the whole fund. You can add some juice there. You can also sell some upside for prices in which you probably trim your position. So that's the way I'm structuring the fund. And maybe you do a yen carry trade on STRF. Right now I'm doing that with Strike. So you borrow Japanese yen, interest rates are going up a little bit, whatever. I still think, we've seen the dollar versus the yen hasn't blown out, which means the carry trade likely isn't unwinding. Interest rates are high in Japan because inflation has been, ticking up over time. But borrow cheap, buy Bitcoin-backed credit. You've created a BTC yen swap in a product like STRF. So, I like that trade. I think there's more trades with the prefs to be made, but it's tough to know exactly, how to make them or at what time. And so obviously, we post a performance every day, so we're down, 25, 26%, and it's brutal, but I think you got to look at it long term and figure out how to position and go forward.
Yeah, quick follow up on that. The yen carry trade unwinding. People got a lot of alarmist posts on timeline this week of, oh hey, here's explaining the carry trade, it's great engagement, education, and then it's completely collapsing and every hedge fund in the world is about to blow up. Sounds like you're not that concerned with where it's going.
I'm not. Yeah, I'm not. I think interest rates I don't know the Japanese interest rate situation as well as I should. So I'll get back to you with some more research on that. But I don't think it's going anywhere based on the few just foreign exchange metrics I've seen and some of the rational research I've done.
Cool. So I guess one other thing that I haven't heard a lot of people discuss, but we think Bitcoin is going to grow. We were showing the 30% trends, and we were talking about where we maybe expect the price to be based on the power law in 5 and 10 years time. I guess what I'm curious about from you, Dan, as you look at these prefs and sort of the credit markets here, what do you actually realistically think is going to happen with regard to how much Bitcoin is going to work itself into the plumbing, I guess, of the other asset markets, right? Like, are we going to see Stretch become 20% of money market funds or equivalents or something like that? Are we going to see the other preferreds take over a lot of the bond market? And I'm not necessarily asking you to put specific numbers on at a specific point in time, but I think that adoption, maybe people expected it to be fast just because these things seem so good to somebody who's within Bitcoin, but it's not necessarily growing super fast initially, but they're brand new, right? None of them are a year old. At the same time, there should be almost insatiable demand at some point in time for something that's paying 10% and is over collateralized, especially if we start going back towards the power law trend. So I'm just curious, in terms of your thoughts that you're willing to share on sort of speculating on what does 5 years out look like within overall markets, and how big do these instruments go, and what does 10 years out look like? And that's less for sort of strategy and Strive's stock price or anything like that, but more so about how much of that credit market these products are taking up.
Yeah, I don't think I'm super bullish on them because I just think the market, like the bond market's going to flow into high yield products that are proven. I think it's going to take a lot of time. I think in 10 years, if Bitcoin is auditable, fully auditable, transparent collateral, and banks are lending against it, which they will be, then these products will look quite safe for investors, and they'll be quite predictable. Like the difference between a bond backed by assets of a company that may be hangers in the case of an airline company and expectations of future cash flows. The difference between that and a company that has a full robust Bitcoin balance sheet that is 24/7 transparent and can be changed and validated in real time. I think that's better credit, especially for agents. Like I think AI agents are really going to have a large role in determining the creditworthiness of these companies. They'll be like, oh, okay, that's how much Bitcoin they own, audited by Big Four accounting. This is the necessary drawdown to have the dividend not paid. Okay, I'm going to buy that. Versus I don't know, what these assets are really worth on the open market. I don't know if I could even recoup the assets in the case of bankruptcy. It would take a long time. So yeah, I'm pretty bullish on the prefs.
Yeah, I think once people experience having an AI agent be an active fund manager for them, most people, the average retail investor, it's going to be very hard to outperform that. I mean, right now though, we've seen several, especially all these altcoins of trading bots have been released, and a lot of them I saw lost $99,000 in the first week it started trading, so they shut the bot down. But it's going to get there. It's going to keep iteratively learning and get better for AI, I think, agent training. As you look forward, what do you think about that? Are you see yourself more as a fund manager becoming an engineer, a prompt engineer / figuring out how to use these tools and automate systems that can then at least give you the indicators faster to be able to make decisions?
Yeah, I think they're really good these tools are really good for research. And I query them for long-term horizon investing, but my style is pretty weird. It's kind of long-term trading, but I don't even like the word trading. It's investing, and it's all based on Bitcoin, and a lot of it uses a lot of options. So yeah, I mean, I don't make like day by day, week by week, even really month by month decisions. So I use these tools to help understand kind of the on a daily basis, the financials of a lot of these companies. So a lot of the energy companies, but I don't think it's really changing the market psychology that much yet. Agents aren't yet interacting with the market. So the large long-term trends are still being dictated by market participants, not the high frequency stuff. The high frequency stuff is a waste of time if you're not Jane Street.
Yeah.
So in running your fund, I guess, and even in your sort of personal investing, how do you manage the, I guess, psychology and behavioral aspects of this, especially now that you're running other money for other people, I guess? And thinking about sort of, a day like today where we started off and none of us were feeling super wonderful based on sort of the Bitcoin price being down today, as well as a lot of these other stocks and preferred classes. But how do you try to govern that for yourself and your investing decisions and your horizons over the long term? Because there's a lot of, I guess, like noise that can come in, and we really want to get back down to that signal.
Yeah, for me, it's always been the power law trend. For me, like if you invest in, I mean, I'm going to have another fund in the future that invests in preferred equities only, but the time being, like for me, the only real conviction or chart or trend or belief in Bitcoin that is held has been that trend line, that power law trend line. And if you sell the tops and buy the bottoms, you've been quite successful. And that's on multi-year time horizons. So the reason for the fund is setting up something that is able to do that for investors with the best tools possible. Like I think back to when I was bullish during 2022, and I didn't have the expertise in options or in leverage, or I didn't know how to set up kind of a levered long position. And now I think you can really, by using good strategies, get massive outperformance along this trend line over time. And that's my intention. That's the one thing I believe in. This isn't like value investing in public markets, right? This is more analytical probability investing along a power law adoption curve. And so that's how I'm running it.
So have to ask question from a personal Bitcoin standpoint, like what wallet are you rocking? Like, where do you buy your Bitcoin? Like, don't get into like too many OPSEC details of exactly what you're doing, but we focus on Bitcoin personal finance. We talk about, self-custody. If you're someone that's very active in like, I think you said like interactive brokers in, these different like trading platforms, what are you doing on like more of the Bitcoin side? Because you said 2022 is when you really like, hey, I'm committed to like this power law and I believe in it. Yeah.
But personal wise, I use Unchained and cold cards. Yeah. Fund wise, I use ETFs. I think ETFs are pretty bulletproof. I like FBTC. Personally, Fidelity is kind of guaranteeing it, whereas BlackRock's you have custody risk with Coinbase, but even still, like those are pretty systemic, institutional grade investment products. So, personally, and I don't borrow against my Bitcoin. That's the other thing. So I have a portion of my own Bitcoin. If I want to borrow against it, I keep it in an ETF and then borrow against that. Right now, I don't borrow against the cold storage stuff. It's partly a discipline thing. Like having stuff in cold storage, also mentally, like if you have stuff in cold storage, you don't look at there's no P&L, right? Like there is no P&L. So if I do any sorts of trading, like for example, like the MSTR calls I was doing 2024 or the MSTR positions, like those are all in brokerage accounts and you see the P&L, it's very flashy. It really messes with your mind. So I try to keep, a large position in spot because there's no P&L. And then furthermore, I do have multiple brokerage accounts, some of which are ETFs that I never touch. And so I keep those on the side. So it's all kind of psychology stuff. The smaller you can keep your P&L on speculative plays in one account, the better your mind will behave, in my opinion.
Agree with that. I think everyone should take a similar approach to the cold storage Bitcoin. Think of it more just like equity in your home. You're not checking Zillow, or you shouldn't be checking Zillow every day to see what your home equity is. Because are you really going to be selling your house in 3 months? Probably not. And be very careful about how much you borrow against that, because people get in this trading mindset when they really shouldn't. So
exactly, and it's easy to be like, oh, if I just sold yesterday, I'd be up now. But when there's a physical barrier to that sort of behavior, it really relaxes your mind.
Yeah. And I think days like today kind of go through the importance of that. And there's that whole, I guess, fourth turning structure of, hard times create strong men create good times, right? The discipline of keeping your Bitcoin in cold storage, or at least having an amount that is on the side, and doing other things and keeping those things separate, are what's going to make you strong as a man and create good times for you and your family down in the future, right? And I think a lot of people tend to want to play more than they should, with more than they should play with, because they think that they see what's happening there in the future and everything like that. But you got to be able to hold through these bears as well. And that's very hard for a lot of people, right? You want to make sure that you don't lose more, right? Like a lot of us, I think we were talking ahead of this, is like, what if we go down to 50 or something like that? I don't think we're going to 50 tomorrow, but could we go down to 50 next month or in January? There's a possibility of that. Is that going to wreck you? And if it does, you're definitely over leveraged at this point, right? And so the advice, and sort of, I don't even think it was advice, but what you're doing, Dan, I think is what everybody should be doing with at least part of their stack, if they are doing any investing or trading beyond that.
Yeah, totally agree.
What's the process been like starting a fund? For people that, they say people that go to Ivy League schools, create your own job, don't go apply for some, like build what you want to see and what you want to be doing every day in the world. And especially for like the next generation, Gen Z, it's like, what can you do in an AI centered world where so much can be done so quickly that you need to be very enterprising and entrepreneurial on how you use these tools to get ahead of people that aren't using these tools? Very similar, like a sentiment Michael Saylor had. What is kind of your thought process? And like, if you were speaking to someone that's like looking to start something, is it go get fund management experience, at a big firm first, 6 years, and then go start something? Or what have you learned?
Yeah, it hasn't been fun, especially because we're down. We entered at a tough time. So, it's entrepreneurship. Like at times it's pretty brutal. So I will, caveat all of that with this. Like, it's not fun when you're down. But in terms of the whole social media, and so yeah, I was in grad school at Brown when I was in the MSTR trade, and I was just like tweeting about it. And then when things got crazy, I was posting P&Ls. And so the social media is just massively, massively powerful. And then you got a following, we got True North, like we got a lot of latching on. And so for me, that was the traction I gained, that like I couldn't have done that. It would have taken 20 years to get that sort of attention in the financial world, just through working like a corporate gig. So it was all content creation and kind of trying to provide value. I was doing a lot of like mathematical analysis on like the options chain on MSTR, which people find pretty valuable. So like,
it is good. I've watched a lot of your stuff. I try to
appreciate it.
Try to tab it out when I see it. I'm like, Dan's he's frustrated by this pref. Like, I wonder why.
So I think all of that's valuable. And then, so the social media part is the marketing department. And then obviously any business you can just create using AI, or you understand it. It's like having every book at your fingertip and a vast amount of wealth. So I think in the modern world, it's just who takes action fast enough to create different things. So like we stood up a hedge fund in 2 months for $50,000, right? And like, historically that's like a full-on hedge fund, like a full-on SEC compliant hedge fund. So I think that was not possible, in the not so distant past. And we had no mentor or really anyone that taught us how to set it up. It's just, we had a lawyer and a fund administrator and an auditor. And I talked to some people, they gave us the contacts, and we were off to the races. So it's pretty amazing what you can set up in a short amount of time. And I think you just have to use your interest and you have to market yourself. That's the other thing, is if no one knows you exist, it's really, really difficult to get any sort of business. Like I'm by no means the sharpest tack, but I'm good enough to have people notice me. And I think that's the case for a lot of people. A lot of people have talents, and you want to put yourself out there and have yourself get noticed. It's the only way, you're going to hope to succeed in kind of the internet age, in my opinion.
Well, and I want to sort of pay a compliment, which is, and you kind of said, we're a Bitcoin fund, right? And then we're going to do a prefs fund, but you're not trying to be a hedge fund doing everything, right? Like, it'd be very easy to go in and say, oh, let's go play in mining stocks or AI stocks or something else like that today. And I think it takes both sort of discipline, but also intelligence to know that trying to keep things tight is probably going to be better, and you're going to attract the right kind of capital, right? Like, if you are doing things in Bitcoin, that's where you've sort of made your name within the community in the analysis that you were doing on MSTR and, Bitcoin, IBIT, the prefs. You're not going to try to expand that knowledge and do it everywhere. And I think a lot of people fall into that mistake. And that's probably something that will be something very valuable for you in the long run with your funds and everything like that. So
I appreciate that. And I think that's a really good perspective. Like, the world's massively competitive now, especially online. So the only real defensible moat is authenticity. I listened to a lot of Naval quotes about that, but like, the only real, personal branding, authenticity, being different, combining multiple things into one entity, like, I think are all really valuable. Not talking about Bitcoin or any of this stuff on its own, but it's like, if you have 3 interests, you combine them, you market online, I think you can build a business. I really think anyone can, but not saying it's easy, but I think you can.
You can. And I mean, all 3 of us, I know, Jody's building a business with his team, and I've, built a couple of different businesses. You can do it. It's tough. Like, anybody who's just had an easy time with it, they got super lucky. They don't know how lucky they got it if they built a business and they had an easy time with it, because it's forged through fire, and you've got to have those issues. And a different day for another story. The first business that I started with my partner, forged by fire. Literally, we had a fire on the property the first day we opened that business. So true story. It's out there. But it's something that also I think that Bitcoin in part can allow you to do is take the risk, right? Not sort of like with your Bitcoin or anything else, but like, you, as people say, you can just go do things, right? Like, as people have within this community, or say, I've done this analysis, this is what I came up with, I want to share and get feedback, right? Number 1, am I right? And number 2, if I am right, I'm making a name for myself after showing proof of work in what I'm doing. And I think that that's really important compared to, did you pay your dues? Did you buy the right people coffee at 7 in the morning and stay later than your boss? Like some jobs make you want to do.
Totally.
Yeah. I mean, I think exactly in the Bitcoin space, for any listeners that want to build a business within the Bitcoin ecosystem, I think it's also really good to know what your strengths are. Like you said, the 3 things, Dan, that you can combine together and that like you do authentically and people understand it. And I think very similar, like you guys, do an excellent job at True North, going deep analysis, whether if you stand on different sides of a particular issue or what, what's under or overvalued. But 21 rates, we're not trying to do any of that. We really appreciate your analysis, but we want to focus on the lending and custody and cards and everything. People, someone like Brian, hey, I want to move to a Bitcoin standard. Okay, great. Like, here's some good objective info that we can give you. Because I used to work at a custodian, so did Avi. So we understand that. And so I think being very receptive to partnership and accepting others to be like, hey, here's my circle of competence. And then let's go find some people that do these adjacent things that we can then have their perspective that informs how we educate everyone on Bitcoin personal finance, why it should be the bear asset that underpins everything that you're building wealth-wise. Strategy World in February. It's coming up in Las Vegas, not Orlando this year. Dan, are you going to be there? What's your plan? Are you guys going to do an event again? Is there anything you can share from Strategy World?
Yeah, I mean, I'm going to be there. I might be the only dude there, but that's my plan. We were actually we got told by the management team, like, yeah, no one signed up. And I'm like, oh, geez, or like very few people had signed up. So I'm gonna be there, hanging out, talking about prefs. Look forward to it.
You mean Strategy's management team said nobody signed up?
Yeah, they're like, no one signed up. For Bitcoin for corporations, not the BI stuff. I mean, when the stock's down 50% in like a blink of an eye, it's pretty tough to rally the troops.
Yeah,
we're going. We'll do a live show from there. We'll talk prefs. It's got to. I know Brian's going. Brian, you would.
Yeah, I think I already bought the ticket when it was at a discount the first time because I was feeling excited about it in May. But just means that we'll have more access, I guess, to Saylor and to Fong and to Andrew and everybody else, right? So learn a little bit more that way. One thing that I just thought might be a really good thing for us to ask everybody we get on the show, but Dan, who's somebody out there in the community that you think is under followed or their work is sort of not quite, I don't want to say appreciated, but like that everybody should kind of go watch, right? So, outside of the True North community or other people that maybe people know? Like, who's somebody that you watch and it's like, I don't know why more people don't see this guy or that woman's analysis?
Underwatched people. I like Mel Madison for macro. I like Capital Flows for macro. I like Pigeon a lot. I don't know if you guys have seen Pigeon, but I like his stuff. And then who else? Yeah, Bitcoin Asset Research is really good content. There's a lot of people who are very good.
Make sure. Oh yeah, Bitcoin Asset Research. I had a call with maybe a month ago.
Yeah, they're good, but I hadn't seen Capital Flows or Pigeon, so I'll have to go look at them. So thank you for that.
I don't endorse the messaging from Pigeon all the time, but I like his.
It's not about endorsement. It's about also getting different viewpoints. Like, it's also like, who's somebody you vehemently disagree with? Like, you should follow that person and try to like make sure that you have good arguments for why you vehemently disagree with them, right? It's something I think really important. My dad used to listen to talk radio, and he used to listen to talk radio that was at the complete other side of the spectrum from him, so that he knew how to make his arguments better and sort of like collect his thoughts on what he believed. And I'm just like, that seemed like a waste of time when I was 10 years old, but see the value in it now.
Totally.
Yeah. All right. Well, Dan, we're wrapping up with time. Really appreciate you jumping on. Pleasure as always. I appreciate your authenticity. I think you're really good about being very transparent, both now with your new fund, but also, from the beginning of where you stand on the trade. Hoping for a big 2026. Matt Cole was on last week. He's also thinking the same thing. Second half of 2026, he sees like 180 is his price target or more. Dan, I appreciate you sharing. I think a little more conservative view, around like 150 or so. But people should be hopeful. Now is not the time to sell all your bags. Don't touch your cold storage Bitcoin. Always have resistance money on hand. And any final thoughts, Brian or Dan?
No,
this has been awesome. Thanks for having us on, guys.
Yeah.
Of course.
Stay through the day. We're going higher. So
exactly.
I think we got to bounce. It's time. At least off at 85. So, all right, everyone, sign off.
Talk soon, guys. Bye.
Thanks.